Maybe it'll be better this time.
Or maybe it'll still be awkward. This is Alec and Elizabeth with Awkward Conversation State.
We are recording. Yeah. Okay. All right. We're here with Amy Gunning, and Alec is pretending to be a Halloween ghost today. We aren't sure where he is, but there was a lot of technicalities today. So we're just going to go ahead and get started. And Amy, you're with First American?
I'm with First American Title. Mm-hmm.
Okay. And you, I met you because somebody wanted me to do a class on owner financing, and you were the one
I was the person.
understanding the title piece of that.
Yep. Yeah.
And since then, I've called her about subject to. So I think we want to talk a little bit about unusual financing and subject to, and how the title company works and how they can partner with you to make sure you're getting the right
Perfect
thing.
Yep. That is great. What shall we start with?
So I think a lot of people don't remember what subject to is from real estate school, and the consumer probably doesn't either. So let's start with, you get a loan buying a house normally, right? We get a loan from the bank, and then the loan has some conditions in it. And you go over those when we go through closing, but none of us really pay attention, right? We just want to sign the papers and get the keys.
Yes, and get the house, get moved in.
Right.
Right.
And so then you decide to sell it later, but maybe it's a uncreative financing or something a little bit different. So
Correct.
let's start with the easy one. They want to owner finance. So they want to keep the house because the market's good, and they have a low interest rate. So they're like, I don't want to sell it. I don't want to get rid of my interest rate.
So when we're talking about owner financing, are we talking about sellers selling subject to their loan?
So a seller would sell, but they still owe on their loan.
Okay.
So I want to sell my house. I still owe.
Correct.
I have a low interest rate because I bought in 2020. But I don't want to get rid of my house because I have this great asset where I have a low interest rate, but I still owe money to the bank, and you want to buy the house from me. And I said, I'll carry the note because I know I can charge you 5% interest. I'm only paying 3% interest. So I'm going to make 2% interest plus whatever I sell the house for, right?
Okay.
So how is that? How do you facilitate something like that, and what cautions should people have?
Okay. So if I'm understanding correctly, what you're saying is that I own a home, it's worth $500,000, I owe $250,000. I've got $250,000 equity. I'm going to have somebody go ahead and take over my first note, and then I'm going to carry the balance.
Yep.
Correct? Okay.
Or yeah, that works.
Okay. So I look at, you can do this a couple of ways. Both of them would be a subject to. Okay. Well, let's back up first. Let's talk about subject to. So subject to financing is when the seller keeps their loan in place, the buyer buys the home and takes over the seller's payment. Okay. Here's the catch with a subject to. Extremely important as a title company. We can only close subject tos if it's conventional financing. If there is FHA or VA financing, we cannot close those transactions. They have to go through a formal assumption. I'm not sure if there are title companies out there that do that, but First American Title, we cannot do that.
I don't think anybody can. I think FHA and VA traditionally are assumable loans. So
they have to be formally assumed.
So if you have an FHA or a VA, you can do it the assumable piece.
Correct.
Take care of this naturally.
Yep.
But the conventional loans generally
on FHA and VA, real quickly, it's called a formal assumption, where they would go to the seller's mortgage company and qualify. Seller would be released of liability, buyer takes over the payment. Okay. On a subject to, that is not the case. When a buyer buys a piece of property, they're going subject to the loan. There is no formal assumption. Okay. So let's get back to the scenario where my house is worth $500,000, I owe $250,000. I'm going to go ahead and carry the other $250,000. So what would happen is you can set it up two ways. Each way is a subject to on the loan that I still have as a seller. The second loan for my extra equity, I would either do a note and deed of trust and be in second lien position, or I would do a wraparound deed of trust where I would take the mortgage that I have and wrap it into my equity and create an entire note for $500,000 that includes the $250,000 loan that I currently own on.
And it wouldn't be doing that with the bank that you have the loan on. It would be doing it with the title company.
Correct. Yeah,
Okay,
correct.
so-
So there's no bank involved. There's no assumption, no anything. I am just, as a buyer, I am taking over the seller's mortgage. And then if the seller's going to carry the rest, then I've got to pay the seller too. One thing to mention, very, very important on subject to's work, but any conventional loan has a due on sale clause. So the risk is that if you go ahead and buy a home subject to, if the lender that the seller had gotten a mortgage from finds out that you have purchased the home subject to, they can call the note due, which means you either have to refinance, find money to pay off the loan, you'll have to replace the financing.
So if you're selling to a stranger who you don't know, they would have to refinance the loan, and maybe they would be able to, and maybe they wouldn't be able to, or
Correct.
maybe they wouldn't be willing to.
All of the above.
All of the above. So if you are doing it, I always think these are a little bit safer if you're doing it with a family member, because you know the family.
No, that's right. I mean,
It depends on your family.
typically, yes. But it works. We've done them. It works. Sometimes it works great. A lot of times, here's the other catch is that I, as the seller, if I let somebody buy my home and make my mortgage payments, my credit isn't cleared up. So if I want to qualify for a new home, my credit is still being absorbed by the loan that I owe.
So unless you can afford a second home.
Exactly.
And you wouldn't necessarily get second home rates.
Exactly.
Because you already have a first home. So
exactly. That's the thing is that's the catch there. But if you're in it for the long haul, you're not in a hurry to buy another home, or you have the luxury of buying a second home, great. A lot of these I've seen where the seller can't do anything for, let's say, 2 to 5 years. Okay, go ahead and buy my home, make my payment. What they can do is they can wrap this note into a big note and make the loan payable in 5 years. So the buyer's like, I'm going to go ahead and take over this loan, but the agreement is I have to either refinance or pay off your loan within 5 years. So you can do that too, to where you're not carrying out a 25-year mortgage.
You would hear that as a balloon payment.
Yep, balloon payment.
So you would hear somebody say you would make a balloon payment in 5 years.
Yep.
That would really mean that you're refinancing the whole note, or you have an inheritance or something that you got the cash for.
Correct.
Okay.
And people seem to like that. Another thing to consider. So what's going to call the note due and payable? Okay, I'm not a bank and I'm not an attorney, but as a title company, what I see, payments not made, obviously, they're going to call the note. The hazard insurance, if there's a change in the hazard insurance as far as ownership, lender gets a new policy from the insurance agent showing a new buyer, that could trigger a due on sale clause. I don't know the solution for that. I just know that could be the cause of that. So that's something you want to talk to your insurance agent about, pick their brain, see if there's anything that they know of that you can do.
Okay, and then what about someone the other day mentioned that there are bots that will go out and search public records for things.
Mm.
And so if they see that the title is changed,
Yep.
I don't know that lenders are doing that now, but it's certainly the technology is there, right? To have a bot go out and search for any kind of change in their and so now it's, instead of being something where they would have gotten a piece of mail or ran into someone at the grocery store or one of those traditional ways of finding out the house has changed hands, they now
Interesting.
could maybe do a bot.
And so when you purchase a home, a deed records from your name as the seller, let's say to Elizabeth's name, the buyer. So public record is going to show that, I sold my property over to Elizabeth. So they could catch it, they could.
Because it's public record, it goes into public.
Right.
Anyone can look for it.
Right. Exactly. Yeah. So you've got that. I mean, there are risks involved. Like I said, number one, the due on sale clause. Number two, change in the deed. But if you're upfront, everybody knows the risks, and then they want to make a decision based on that.
So what you're saying is it's really important if you get this kind of offer or your seller wants to offer this type of product, that you have a good conversation with the seller and the buyer, understanding what they're doing, that it's not a traditional home sale.
Correct. Yeah. That yes.
In 6 months, the whole thing could implode.
Yeah, that's the key thing. Now, the thought process is, gosh, these lenders are huge. As long as they're making their payments, there shouldn't be a problem. Do we know that? We don't know. That's, I think, the thought process. But realistically, if you just iron everything out front, there is a due on sale clause. They can call the note due. Seller, your credit is tied up until your loan is paid off. Seller, do you want a balloon payment? Those are all things that's all good conversation.
Okay. Okay. And then the other reason that I had Amy today is that I had a listing that had, didn't have a ton of equity in it. They bought at the top of the market, which means that they bought right when the interest rates were about to change. So they got a very good interest rate on a house that's would maybe be considered a first-time buyer starter home investment. And now they want to sell. So the bots are out there searching, or somebody's out there searching for it, because I probably got 50 different offers worded differently and presented differently. And they wanted to create a subject to offer. So the offer, the way the first one worked was that they were going to give the seller some amount of money, a small amount of money to sort of walk away. They were going to pay the realtor commission, and they were going to pay the closing costs. They were offering no inspection or an inspection for their information only. So it was kind of a dream come true on paper, right?
Yeah, for sure.
But the problem is now my seller couldn't go out and buy a new home.
Correct.
And we don't know this person. So if something were to happen, would they really refinance? And they didn't give a time frame for refinancing. So they didn't give the 2 to 5 year balloon. It was just when interest rates go down again. I saw on the news yesterday they expect them to stay where they are for a couple of years.
Oh,
so we hear that they're lowering, then we hear that they're staying the same, and so that's one of those games that we can't really predict.
We need that crystal ball, right? I wish I had one for my whole life, but
I know,
right?
I would know when I was going to win the lottery.
Exactly.
My husband really wants us to win the lottery. It's like,
I want to win the lottery.
Yeah, we all do. And then this seems too good to be true. So I've sent all of these to Amy when I get them, or not all of them, because I literally got 50. I just got one again last night. The house isn't even listed anymore. And so it had some interesting things in it, that offer.
Yeah, I can't quite, what you described is correct. One thing that we haven't talked about is, so let's say I decide that I want somebody to buy my home subject to. How do I know my buyer is going to make the mortgage payment? So what people do is they'll go ahead and set it up through a long-term escrow servicing company.
Okay.
So what happens is my buyer makes the payment to long-term escrow. Long-term escrow sends the payment into the mortgage company.
Okay.
If the payment isn't made, the long-term company lets me know. So I think that's something that everybody should consider. The buyer may be fine and well, but that at least you've got a chain of where the money's going in, where the money's going out. Most of the subject twos that I've seen, there is a long-term escrow company involved. We talked a little bit about I've got more equity, so I'm going to go ahead and carry my 250. Okay, so here's the scenario. Let's say the sales price is 550. I owe 250. Okay, I decide I'm going to carry another 250 because I don't want to be paid off for 5 years. We're going to have a big loan in my name for $500,000, which is my 250 that I owe plus my 250 equity. Okay, we're wrapping that into one big loan for $500,000. It notes in there that out of that, my equity is 250, my loan is 250. The payments go to long-term escrow for the $500,000 loan. Long-term escrow splits out the payment. I get my 250, and then the other payment goes to my mortgage company to make sure they get their $250,000 payment.
So if we just want to do math that no one will make sense of, if they had a $4,000 payment, $2,000 would go to the note and $2,000 would go to the seller. Every month.
Every month.
So it seems like a good deal to the seller.
It seems like a good deal to the seller. A full disclosure, that's it. Full disclosure would be my only thing. conventional financing, full disclosure, let's be realistic about the due on sale clause. Let's be realistic about, could the buyer qualify? Do I want to carry it for 30 years? Do I want to carry it for 5 years?
Okay.
Yeah.
So one of the things I think also people don't understand is when you do an owner carry or even this type of product, if they stop making payments, it's not just I get to go to their house, knock on the door, and kick them out.
Correct.
So you have to go through the same foreclosure process that you would have a normal one, right?
That is correct. Yep. Anytime, as long as it's secured by a deed of trust, that's what Idaho uses. A deed of trust is the foreclosure document, and the trustee forecloses. And I don't have the time period down, but there's a certain time period they have to cure the default. Technically, you're in default if you don't make your payment, and then 30 days passes, and then you've got a certain amount of time. Lender files a notice of default. So yeah, if I carried my wrap, I would have to start foreclosure proceedings myself. Yeah.
On the 250.
Well, it would be on the big 500.
Right.
Yeah.
Yeah.
So.
And would the bank also maybe make the foreclosure? Could it be a big mess like so short sales where you had a first and a second?
So if I carry the 500 and I'm not getting my payments, I'm still going to have to pay my 250 to my mortgage company, or yes, they can start foreclosure. So that's a great question. Yeah. If they default on the wrap, they default on my 500,000. Yep. Here comes my payment due in December. I still have to make my payment for my 250 and then foreclose on my 250, my equity.
Okay.
Yeah. Lots of words.
There are lots of words, and there are a lot of like scary words. And the email, I was just pulling up the email so we could look at it. They have this very pretty home, the mortgage will remain in their names, but they'll take over them.
Yep.
And then they do think that, if they've stopped making payments, he's like, well, I'm a nice person, so of course I'm still going to make the payments.
Yeah.
They talk about the due on sale clause. It says it's rarely, and this is really important to understand, it's rarely enforced. And I was given the statistic from 2 different people that 1 in 100 of them are enforced. Banks are just like the rest of us. We don't pay attention to things until they're on our radar. So if this starts to be a thing, I think banks will start paying attention to it. Or if there's an easy bot that they could do where they could scrub the county records easily, then they might pay attention to it.
And they might. But Elizabeth, what you're so good at is that, like you said, full disclosure. As long as both parties know that, hey, yeah, let's do this, they may call the note due. We're prepared. It's when we're not prepared. It's like, what do you mean they're going to call the note due?
So if I was going to do this, what kind of precautions would I want to make? Like, would I want to run do you see people running a background check, not a background check, credit check, background check? They're criminals.
Well, you never know.
They might be, but no, criminals.
We don't. So we don't see the credit check, but we're the title company. I don't know if the agent, and you might want to check with your broker about that. You can always run a credit check, I'm sure. But the precautions, that would be more of a broker legal question. As far as the title company goes, like I said, we've got full disclosure. I like to have a copy of the note that's being not formally assumed, have the buyer read and approve a copy of it. They can see right there, yep, there's a due on sale clause. We have instructions that are signed at closing that state, by the way, they could call the note, yada, yada, yada. So, yes.
So, do you think this is mortgage fraud?
Do I think this is mortgage fraud?
Just your opinion, not a legal answer. None of us are attorneys, but I did have somebody say that too. If they're taking over a note and doing something that's against what's in them. So I'm just asking because somebody asked me this, and I didn't tell her I was going to ask this question because I just remembered it.
That's okay.
But somebody said, well, if it's technically against what's in your note, is that mortgage fraud? And as an agent, if I'm assisting with making this happen, am I participating in it?
That is a broker question.
It is an attorney question,
yeah,
but it is something to ask because be very careful if you're going to do these.
Be careful. Like I said, I will say, as a title company, as long as it's conventional, we will close them. So if I can't answer the mortgage fraud question, but I will tell you, as a title company, Conventional financing, oh, by the way, fixed rate loan, we will close those. So we do the subject twos. And we do formal assumptions with VA and FHA. So that's a simple too, but mortgage fraud, I would say check with your broker. See what your broker says. But like I said, I do see title companies closing these. I'm not trying to push it, but that's just
No, and I did speak with a gentleman here locally that I know. He's an agent in town, and he's done a few of them.
okay.
So, but he's a person in the business, and that's
what he does.
he understands the risk. And so what scared me about this is that it's coming to my seller who doesn't do real estate for a living.
Sure.
And they don't maybe understand all of the nuances, and they're not ready to have the note called. You know, what happens if the note is called?
Right.
Are they going to pay it, or are they just going to send it back to me?
Well,
and then I'm
yeah.
And how does that work with so if this person accepted this and they had a year's worth of payments being made, and now the bank calls the note, now we have somebody that's put some money into my property and the note's being called. Are they going to just walk away from that money? Probably not. So is my seller going to have to make it whole?
That's a good question. Let's talk about that. So let's say they do a subject to $500,000 home, $250,000 loan. Let's say the seller gets the other $250,000, right? The loan is still in the seller's name. So if the buyer does default, couple of things, the buyer's still on title to the property. The lender forecloses on the seller. But if they foreclose on the seller, they're still foreclosing the home, right?
But it isn't in the seller's name anymore. It's in the buyer's name.
Just the home. The loan is still in the seller's name, and nobody wants a foreclosure. Nobody wants a foreclosure. Yeah. So I don't want to throw a monkey in the wrench, but there is another way that people have done these closings. It's called a contract of sale.
Okay.
Okay. Have you heard of those?
Isn't that like a it's more like a car loan, right? Where you can just walk in and take the house back.
Okay, yeah. So what it is, I consider it kind of a lease option. Because what happens is the buyer and the seller have a contract that says, okay, buyer, you're going to rent my home, or you're going to make payments until you fulfill the obligation for the payment. I'm going to keep title to the property. Title's going to be in my name. Once you fulfill the obligation of the contract, then we're going to deed the property over to you. You get your financing, everything is done. So it's not really a subject to, but it does protect the seller because they don't give up ownership. They have control over the money. The buyer makes the money. The seller makes the mortgage payment. It's just a different way of doing it because, like I said, the seller holds title to the property.
Until it's paid off.
Until it's paid off. You know, let's say the buyer has a five-year obligation. We want to buy the house outright in 5 years. Seller says, well, that's fine, but I don't want to give up title and I want to make sure you're making the payment. So for 5 years, I will agree to lease the property to you with an option to purchase. You're in first position. Nobody else can do that. So for 5 years, buyer makes rent payments to the seller, right? After 5 years, seller says, okay, you have fulfilled your obligations of the option agreement. We're going to go ahead and close. We'll deed the property to you. You'll get your financing.
And I do think that type of setup has a different foreclosure process. And I don't think the state likes them, but they are legal. It's not that they're illegal. It's just it is more the foreclosure process is more like when you don't pay your car payment, and even though you've paid it for 3 years and you owe 5 years, they can just come take your car, repossess it. I think it works similar to that for the foreclosure process.
Well, it does because the seller just basically says, okay, we're gonna void the contract of sale. You didn't finish making your payment, so goodbye.
But the buyer still has some ownership or equity in the property, or has some money that they've put towards the house. So there is a different legal conundrum that you get into.
You know, that I'm not familiar with that, and I'm not done a ton of these. The big difference for me is that the seller holds titles to the property. They don't give up title.
Yep.
So if the buyer doesn't make their payments, the buyer, kind of loses their money. And the seller's like, okay, well, I still own the property. I'm going to go sell it to somebody else. I mean, it's not a subject to, but if you have parties that just aren't comfortable with that, it's another way of buyer buying a home they want. They're not ready to purchase it for 5 years. Seller holds title to the property. They type the property up at the current sales price. Let's say prices continue escalating, and who knows, but in 5 years prices are up a little bit. Sellers agree to sell the home to the buyer at 500,000. In 5 years, maybe the house is worth 550. Seller still has to sell the house to the buyer at 500 based on the agreement.
On the agreement.
Yeah.
Yeah. So they arrange the price ahead of time and.
Yep. Exactly.
Yeah. I also ask lots of questions. So ask your broker, ask maybe an attorney.
Yep.
And then
For sure.
Amy or other title people are always here for you.
Absolutely.
She's my go-to for subject twos because she understands them.
Well, you know what? I think that we have a pretty good handle on it. Title wise as well. We have a great underwriter. He's been around for years, and he's helped us with a lot of stuff too. But and as we talked about, as long as it's full disclosure, it's conventional financing, everything is spelled out. Buyer and seller are aware of the due on sale, what can trigger that. It's certainly something that we can close, and we have, and we continue to.
And some of these offers, when I got them, they came as a text message. Some came as an email, like clearly AI generated and with emojis and all kinds of fun things, and not really an offer. And then I've had a couple that actually had an attachment. One was a letter of intent, and one was the one I sent you was more of an offer.
Yeah.
It had all the elements.
Yeah.
So do you have to turn that into your broker? So that is a good question to talk to your broker about, because we're supposed to present all offers to the seller. And this is where my little black and white girl, following the rules gets into, I'm getting flooded and inundated with subject to offers in an email, and they're in writing. So I don't know what the answer is. Maybe ask your broker what they're the most comfortable with, so that you make sure that your broker is comfortable with them.
Yeah.
For that. Let's see if I had some other questions for you.
For sure.
Is there anything we've missed?
Well, we talked a little bit about those wraps. If the seller doesn't want to be paid off their equity for 5 years, they can wrap that loan into one. We talked about having it set up at long-term escrow, neutral third party accepting payments. We talked about the pitfalls of the process. I will say too, as a title company, we're not attorneys. We can never give legal advice, but you can always reach out to us directly with questions. We're more than happy to assist.
This question was about disclosure. So it might be in your best interest to have your attorney draw up something that says, you've given them the advice on disclosing what the pitfalls are, because you would hate for in 2 years or 5 years for the seller to stop paying their note, or they refuse to refinance it, and they come back on me as the agent saying, you didn't give me that warning. Where you need it, you have that you did.
Yeah, you can certainly do that. And I don't know now with this, I don't know if there are disclosures the broker has. They might have disclosures for this too, that they have the party signed. So maybe check with your broker and find out, because I think they're fairly popular across the nation. I mean, some of those rates are 2.5%, 3%.
And I do think they were popular in the early 80s when
90s, late 90s.
When interest rates were so high, and then they would offer a buy down of some kind and wrap them and do things to get them. Right?
I don't mean to date myself, but that's kind of when I started learning, was kind of the mid to late 90s. There were a lot of
and all of this sort of thing.
Yeah.
And it went away because it wasn't a thing, and interest rates were so far down. But now we're getting into, we have a whole lot of sellers that have a low interest rate and a whole lot of buyers that can't afford to buy.
Yeah.
And then I do think all of these offers are coming from like the people who circle
investors.
Yeah, they're investors, or they're seeing a market where they might be able to make some money. And so they're in it for them. And that's one of the things you have to keep in mind, is those folks that are sending these aren't there to make your seller
right. For sure.
They're there for the seller, and that's your job as the agent, is you need to make sure you're protecting them and making sure you're doing your due diligence.
Oh, absolutely. I know we touched on this, but one thing to consider is, the rates were low in 2020, 2021. Prices were high. A lot of people did, though, put a lot of money down. One thing to consider with these subject twos is a lot of times the sellers do have a lot of equity and they want to be cashed out. That's why I've seen a little bit of holdback on that, because a lot of these buyers that want to subject to their loans don't have the 200,000 to give the seller. So what you had brought up about the seller, carrying their equity for a couple of years is always a great option. And that's something that you might consider, because if you find a home buyer wants it, they'd like to do the subject to, so the seller has a couple $100,000 equity, maybe they'll consider carrying it for a few years. Buyer knows in a couple of years they'll have the money for it. I mean, that's certainly a good option.
And what you're talking about is, I have a buyer, we've been struggling to get them a house. You have a listing, your seller really wants to sell it. And it's that normal transaction of two agents working together, which we're really good at. These are coming from strangers.
Well, sure, yeah.
All of these offers. So I do think there's an opportunity with what Amy's talking about, with where you have a buyer that's really struggling to get into a property, maybe with financing reasons. Maybe they have a ton of cash, but they don't have the credit.
Yeah.
There's always been those where you and I, as an agent, can work together and get the deal done. That this stuff is coming from a perfect stranger.
Yeah.
Who I don't know. It clearly, in many cases, has been written by AI because of the way that it's structured. It looks very much like a ChatGPT product. And so I don't know that I trust them, because I think they're just spamming all of us with a ton of, they've scrubbed the MLS and the tax records. They did seem to know how much my seller owed on the property. So they were able to realize, and they were assuming the seller was in trouble, and they were not in trouble. They just wanted to sell.
I'm wondering what, if the loan was 2020, 2021, they're assuming it's a 30-year mortgage, they amortize it for 5 years, amortize after 5 years, you're probably right. I wonder if, the philosophy of, local only is, maybe something to consider, especially on these subject twos. I don't know, I'm not a realtor, but I don't know if these out of state quote unquote investors, I don't know. You don't know what you're going to get.
No, you don't know, because I can tell you I'm a great person and not, and look fabulous on paper.
Yeah. Right.
But not.
Right. Yeah.
And so working with an agent that working with an agent who knows their client, that's also super important. You want to make sure you're protecting our job as real estate agents is to protect the client first. So there's great resources in the title companies. I have found Amy to be better than anybody at subject twos and all of that. So calling and having a team of people that you can call. I've sent her the offer. I'm like, what pitfalls do I need to worry about? What are some considerations? And she's been great about sending me back and looking at it. Now she's maybe not going to respond in 5 minutes because she's got her other job to do, but she's there for a resource for us.
Absolutely. Absolutely. Anytime, we're more than happy to walk you guys through this. And like I said, it is absolutely doable, but it's just being, scrutinize everything and being completely upfront, transparent is, the most important thing.
Awesome. And you've been in the business for a long time.
A very long time.
So you're very experienced. Can you tell us a fun story, or what's your most memorable moment?
Oh gosh. Oh my goodness.
Yeah, put her on the spot, but it wouldn't be awkward if we weren't putting her on the spot. And poor Alec isn't here to help me with this part.
I guess I can't really pick something out that was more memorable than the other. I just think that it's been a really fun, frustrating, wonderful business to be in. You meet a lot of fun people. You meet a lot of challenging people. I think bringing your best self to work every day is always the best philosophy. I worked with some wonderful people. I've worked with some awesome people over the years. Generally speaking, 95% of people are great, 5% aren't, and that's just life, right?
Yeah. One of my hard, fast rules is that you want to make sure whoever's at the closing table on the title side matches your personality and matches how you treat customers and clients, both, because that's the last moment in the transaction for the most part. When you give them the keys, they've forgotten everything, but they're at the title company. The title officer can really make or break the transaction. So if it's been a rough transaction, you can sometimes that mood and they smooth it over a little bit.
No,
And make it, if they know what they're talking about, they know what they're doing, they're efficient. They make it light usually.
well, we certainly try. And, like I said, most of the people, they're excited to buy a home. Everything has gone great. There are those times when it hasn't been so fun. But yeah, we put our best foot forward. We want to be professional, but we don't want to be robots. We want to make sure we're thorough and have a fun time at the closing table, because it's the
stressful.
One of the greatest things in life is to buy your home. Certainly not the greatest, but it's a big deal. And
It's a big deal.
And it should be fun, and you should be with professional people that know what they're doing, and that make the whole transaction look good.
And if I can't be there, then I always know that the person that's in the room with them is taking care of them.
Right. Yeah. And
I can't always, sometimes I'm teaching or something. So
yeah, but no, I absolutely agree with that. So it is a great business to be in, and I swear, no matter how old I am, I'm always learning. So
I know, isn't that
Right.
amazing?
Yeah,
Real estate
it is.
is always learning.
always things are
What's
changing.
the biggest surprise you've seen in the last couple of years? Anything?
I would say the biggest surprise, gosh, I would say I thought the rates might tick down a little bit more. I guess I'm a little surprised about that. And I think just that, Boise just continues to be such a great place. And I'm not really surprised about that. I just think it's interesting.
I always think it's a surprise when the traffic is back to what it was like 20 years ago.
Oh,
Once in a while I'll drive and I'm like, oh, it's so good again.
I know.
And then it's only for a moment.
Yeah. Well, the thing of it is, what I found with signing people, most of the people that are coming to Boise are absolutely wonderful people. They're here for either a fresh start, different life, job change, whatever. Most people are super great. And I feel like, Boise has its growing pains, but I think it's growing up nicely. I am proud to be here. I love being here. It's a great place to be, and great people, great place to raise kids.
It is.
Right?
Yep.
It really is.
It is a good place for all of those things.
Yeah, it is.
It's been great.
So we're blessed and just super lucky. We're very lucky. Very fortunate.
What is a trait you see among successful agents? Like, is there something that all successful agents, and if you meet an agent for the first time, they have it, and you're like, they're going places or they'll do things?
Communication. I mean, good old fashioned communication, whether it's picking up the phone, sending a quick text, responding to emails. That's really, that really makes a difference.
Okay.
I work with some really great agents that are certainly experienced. There are newer agents that are certainly experienced and do a great job too. So I think it's the good old fashioned hustle.
Okay.
I think it's the hustle, the follow through, your communication, and it's the hustle.
Cool.
Right.
Awesome. Well, thank you for joining us.
You're
Sorry that Ghost of Alex wasn't here. Alec.
Well, we missed him, but we understand. Duty calls.
Maybe it was the conflicting title companies. I don't think so. No.
Not Alex.
So,
Yeah.
not Alex. He's fun and
he is. So we miss him, but that's okay. Maybe next time.
He didn't make any awkward jokes or comments, but he'll have to make up for it next time.
Yeah, for sure. Awesome.
Thank you for joining us.
Well, thank you for having me. I'm so glad anytime.
This subject, I think nobody understands, and you get it in real estate school, the alienation clause and all of the things, and alienation, but there's 3 of them, 2 of them. You said one of them.
Oh, the acceleration or the
alienation.
Due on sale acceleration. Yeah. And there's so much more. But one other thing is, I don't think you have to overcomplicate it. Like I said, I think it's absolutely doable. It's just the disclosure, and we're here to help. So any questions anybody has, feel free to reach out. We're here to help you. We're not attorneys. We cannot give legal advice, but we can certainly, answer title and escrow questions, and happy to do that. Would love to hear from you.
Awesome. Thank you.
Okay, thanks for coming. Yeah, thank you.
All right.
Maybe it'll be better this time.
Or maybe it'll still be awkward. This is Alec and Elizabeth with Awkward Conversations State.